Hey, welcome to the 40 Finance channel. Today we're going to be talking about the QQQ as it stands today in the face of negativity and despair and wars and inflation and all the stuff that's going on. And we obviously have two schools of thought. I would say the most prominent school of thought right now for the QQQ in particular is, bear market, recession, stay away. You'll be able to get it tomorrow for less than you bought it today. Terrible investment, yada, yada, yada. Then on the flip side, you have some people like me, a little bit smaller of a population, who are not retiring tomorrow. In fact, we're not retiring for several years from now. And for us, we have to look at this situation and say, what an opportunity, and perhaps even more, we might say, finally, right? Finally, if you're a long-term investor, some prices have come down, and maybe they're not on, final markdown clearance sale, but for the most part, as we look into today, the QQQ, in my opinion, is relatively fairly valued and provides a significant upside opportunity over the next few years. And in fact, for me, while I'm building up my core QQQ holdings, I'm also taking some chances on the TQQQ, which is the 3 times leveraged version. So for this video, we're going to put our finger on the pulse of the QQQ today. And if you're anything like me, then you've been adding small lots of shares over the past couple months with the understanding that this may not pay off tomorrow. But in my opinion, it could pay off as quickly as the second half of the year, perhaps even sooner once some of these international issues hopefully get resolved. All right, quick look here at the year-to-date chart for the Qs, and the perma bears are super pumped right now because on March 1st, you did have the death cross for the Qs. The 50-day crept under the 200-day. So obviously you're going to see a ton of speculation about how much farther things are going to go down from here. At the bottom, the number one thing that I reference is the RSI with the goal of buying at times when the RSI is under 40. And then if you ever had a flip side when the RSI is over 70, at the bare minimum, that's a good time to sell calls. That's at least the model that I'm following that I've read in a couple other places. And if you follow with me over here, this RSI is going to show up on the left side of the screen, okay? So yesterday, the 14th, we had an RSI of 35. So I did, in fact, buy 1 or 2 shares. You've had that same opportunity multiple times over the past, couple weeks, and even had a low point here from an RSI standpoint in January when you were in the 20s. So summary version here, at least from an RSI perspective, is there's been several days, not only that I've purchased, but several days that are flashing by if you like to buy when everybody else is selling. All right, switching over to the SeekingAlpha view so we can check the health of all these stocks that are in the QQQ. And what I've done is sort of create a portfolio that's just the top 50% weighting stocks in the QQQ. So those are all listed here. And doing this allows us to use some of these other tools that SeekingAlpha has so that we can go over where these stocks stand today as individual components. As we're going through this, if you're interested in checking out SeekingAlpha, my affiliate link's in the description. Help support the channel, and you save about $100 or so. Phenomenal deal. I'm on this site all the time, so check out that link if you're interested. All right, one thing to look at here is today's sort of a rebound day. With all the negativity, the NASDAQ, as you see up top, is plus 1.82%. And let's see how that has impacted some of the names. So what you'll typically see is some names respond better to these upturns because they've been beaten down so much, right? And sure enough, top of the board, you got NVIDIA at plus 5%, AMD pretty close to it, AVGO. So the semiconductors are definitely leading the charge today. But we also have Amazon and Tesla that have been in a downtrend. Costco, Microsoft, and Google sitting here about the plus 2% mark. Now, off to the right side here, we get 3 different types of analysis out of SeekingAlpha just on this quick view. You get the quant formula, which is obviously their own little algorithm that takes into account momentum. You have authors that are people like me and CPAs and financial advisors who write for the site. Then we have our Wall Street analysts. And what's interesting to me is the green, the amount of green in between these stocks, at least from an author segment, right? So again, if you look at these far to right columns and we're scrolling down, there's really nothing in red from an analyst perspective. Now the quant rating, which also factors in momentum, you've got a decent chunk of orange and you have one red. Unfortunately for me, that red is PayPal, which is a stock that I own, but we all know PayPal has horrible momentum right now. But even on just this high level eyeball look at things, there's nothing here that says, you know, horrible recession, flashing red, sell out of the stock market and go hide under a rock somewhere, right? Now let's take it one step further and look at the growth potential, okay, for these companies. So we're going to go here to this tab, and it has all the growth metrics for each company, right? So revenue year over year. We're going to focus on forward revenues, forward EBITDA, and forward EPS. But let's start with forward revenue, and we'll sort by the highest to lowest in terms of projections. So next year, Tesla plus 50% revenue is what's projected right now. We may see this number come down in terms of supply chain and whatever. I mean, you've got to factor in a minus 10 or 20% from today's projections for the worst case scenario. But you know, a minus 20% on plus 49 still gets you to plus 40 or so, right? So Tesla very strong. AMD plus 40% on the revenue side. NVIDIA in the 30s. Qualcomm, Google, Intuit, Facebook, they're all in the 20s. Then you get into the high teens with Amazon, PayPal, Adobe, Microsoft, and even Apple, who, by the way, say 6 months ago, had a projected earnings growth of flat to 1% for 2022. That's what analysts were saying back then, and now you're already up to plus 15%. And if you go all the way down to the bottom of the list, you've got one with Intel that's coming in approximately flat, at least at this point in the year. But interestingly enough, with Intel, we know that if you're playing Intel stock, you're playing for the next 5 years. Their 2022 is not what Intel is playing for right now. They're building factories, and they're doing it here in America, and they're creating jobs. If they're going to win, most of those wins are going to show up 3 years from now or so. All right, now let's flip to the bottom line. How much EPS growth can we expect for these companies? And on the Tesla side, again, let's just assume worst case scenario. Let's assume everyone's off by 20%. These projections are just flat out wrong, and they're off by 20%. Okay, well, Tesla's EPS plus 81%, you minus 20% of that, and on some quick math, that still puts you at about plus 65, right? AMD, minus 54. Take 20% off of it for the perma bears, right? And you're still at plus 44 for AMD. Then you got Qualcomm in the 40s, NVIDIA, Netflix, Google, I'll throw T-Mobile in there, growing plus 30% on the bottom line, aka profits, right? Then we've got Apple, Microsoft, Intuit. Those are all in the 20s, so is AVGO, and Amazon. The next tier is the teens. We're still talking double digits here, right? So these are the laggards compared to some of these guys at the top. But you got Adobe, Costco, Comcast, PayPal, Facebook, double-digit profit growth for 2022. These are not lame duck stocks, guys. These are not penny stocks. These are quality names. You do have a little slip up down here with Intel, at least on the projections. They could be taking a step back. Like I said earlier, if you're buying Intel, it's probably a 3-year hold. All right, I always think this is interesting in the QQQ, and that is the profitability. What was last year's profit margin for the companies that make up the QQQ? And again, this is the top 50% of the index. Well, Adobe did pretty good. They made 88% profit margin on the goods that they sold. And oh, by the way, that was on $15 billion worth of revenue. So do you think Adobe as a stock is going to recover from this bear market that we're in here? I feel pretty good about it. I'll tell you that. Intuit, profit margin, 82% on $11 billion. Facebook, getting smacked in the face right now as a stock. 80% profit margin on $117 billion, okay? They're going to be fine, trust me. AVGO's in the 70s, you get the picture. In the 60s club, we got Microsoft, Comcast, NVIDIA, and Cisco. In the 50s, we got Qualcomm, Google, T-Mobile, Intel, Pepsi, which that one's kind of surprising. And then in the 40s, you got AMD, PayPal, Apple, Amazon, Netflix, and then Tesla and Costco round things out. Obviously, Costco is a retail store, so that model is a little bit different. All right, the other thing to keep in mind is that the QQQ is market cap weighted, so they will figure out some of the best performing stocks in this group for you, and you don't have to worry, say, for example, with FANG stocks. In this downturn, is Apple the best buy? Microsoft, Google, what is it? They will reallocate depending on market cap acceleration or deceleration. So if we look at things right now, Apple is 12% of the fund's total, Microsoft 10, Amazon 7, and I almost forgot here with Google, you have to add it basically because you got GOOG and then GOOGL. So you got 3.7 plus 4.01. So if you put that Google exposure together, it would actually be the third largest holding, at least based on the numbers here today. Then you've got Tesla. But as an example, as I scroll down here, PayPal, which is a stock that I own for better or for worse, PayPal used to be roughly a top 10 holding, top 15 holding for sure. And obviously with their recent performance, they have dipped considerably. And so right now, PayPal's not even 1% of the fund. And it won't be until they rebound and add back to their market cap before they get back into that top 15, if they ever do. So you never really have to worry about somebody like PayPal, a stock that is performing underwhelming compared to the rest of some of the names here. It's not going to drag it down too far because once that market cap keeps sinking and they rebalance, I think, quarterly here with QQQ, it'll eventually make its way out of the top of the index. Now, even though there's only a few companies, 10 or 15 that make up the top 50%, this thing goes on forever. So if you're also worried, here's a good one. Are you thinking maybe Mercado Libre makes a huge bounce back, right? It's lost some of its market cap, and there's a lot of people have a huge bullish case for it. Well, if Mercado Libre does, go on a run, if you will, this 0.37% of the index, as the market cap goes up, it will start jumping ahead of some of these names. And each quarter that it continues, the higher it will go. I see another one on here, Airbnb, right? A lot of people have the bull case about Airbnb. And it could very well be that that's 5 to 7 years away before they would get prime time market cap if everything went right. But not to worry, it's here. And it will keep progressing up the chain. And each quarter, if they're making progress, they will get higher exposure from the fund in general. All right, and quick update for my TQQQ viewers who are in with me on that one. I've got 105 shares right now. My cost basis, I just looked it up, is about $47. And the T's are still in a buying range. Looks like today just barely 39.33, even on an up day. Yesterday certainly was, and yes, they mimic the death cross as well. The same one that the QQQ goes through. So yes, I'm still adding to that. And if you ever get a chance to look at the options for TQQQ, I haven't done it yet because I'm waiting to really accumulate shares. And then when we get finally into an uptick in the market, I'll probably dig in to the options a little bit more. But bottom line, because of the volatility in this one, there is a lot of opportunity to make some extra income from the covered call perspective of TQQQ. All right, guys, so that's the pulse on the QQQ during this bear market, recession, gas crisis, whatever you want to call it. There's definitely two ways to do it. You can sit on your hands, you can talk about the bears and the recession and all that, or you can try to accumulate some shares at a steady pace. Doesn't have to be all in today. Today's the bottom, tomorrow's the top. You don't have to figure that out. Just try to buy when you can afford to. And I would say, personally, I'm looking for RSI days under 40. That's kind of a key indicator for me. Of course, everybody is going to have their own way of doing it, their own recipe. But if you're in this game for 3 to 5 years, if not longer, if you're in your 20s and you're in this game for 20, 30 years, I just don't see how you're not buying into something like the QQQ at this point because it's going to have limited risk in the sense of it would have to be an epic stock market issue for the Qs to go down considerably just by the way that they're created. But the upside for 5-10 years is just unbelievable. So I just encourage everybody to look past some of this negativity right now. Maybe you just buy on a regular basis and don't check performance and keep adding a couple shares here and there. That's going to be the way you win over the long term. All right, guys, thanks for watching. Don't forget to check out that Seeking Alpha special offer in the description. As always, please give the video a like, subscribe to the channel. We'll see you on the next one.